We want to get more now from Colin Ellis. He's economist at Daiwa Securities and a former economist at the BOE as well. Good morning to you, Colin. So let's start out with the ECB. How much of a factor is Greece going to be in today's decision?
Well, I mean, the ECB is one of the two biggest cheerleaders for fiscal discipline in the euro area. So I think it's going to be very difficult for President Trichet to send any kind of overt message about Greece today, and I think he'll try and steer away from that. But it's certainly true that the concerns in Greece are mirrored in some of the rest of the periphery. Various countries face painful adjustments where they need to see wages fall, prices fall, in order to regain competitiveness, and that process is going to happen through several countries. When you couple that with the fact that recovery in the core European countries looks pretty weak, there's a pretty strong case for stepping very carefully right now.
So do you think that they will not announce anything different today? Do you think that they will simply hold the course?
Well, I would actually like to see the Governing Council go further today. I mean, we'll find out more about the terms of this last 6-month operation. We'll find out more about future 3- and 1-month operations. But Trichet said in the past that the liquidity will be withdrawn in a gradual and timely fashion. Now, gradual is more important than timely right now. So what I'd like to see is the ECB agreeing to extend its policy of full allotment in its main refinancing operations. We know that will continue at least until April. But if they were to push that back until, say, June or July, that just sends a clear signal that the ECB is worried about financial stability and is prepared to do what it takes to support the recovery.
What kind of reaction in the markets do we get then?
Well, I don't think you'd see a particularly strong reaction in terms of rates, because overnight interest rates, for example, are so low because the ECB has pumped in lots of liquidity over a very long term, and that's going to be in the market at least until July. So you may not see much reaction in terms of overnight rates, but I think it would engender confidence that the ECB is aware of the situation. It's not going to pursue its exit strategy at the same speed regardless of what's going on, and it's aware that it may need to do more.
Let's talk about the BOE then. We've had this recent drop in the pound. How much is that going to be a factor in the BOE's decision today? Are they going to be weighing that up?
Well, it's one of many things that they will be weighing up. I mean, we had the drop in the pound. We had a very good services PMI yesterday, which suggested that sector was growing strongly. But really, I think Mervyn King's going to get his wish again today and over the next few months. His stated desire is to be boring. And over the last couple of years, monetary policy has been anything but boring. But now, the MPC have agreed that 200 billion is enough in terms of asset purchases. Bank rates have been on hold for a very long time. And we really think the MPC is probably now in hibernation. There's a lot of mixed messages in the economy. There's a lot of volatility still in the market. And we think they will take some time to let things settle down and see how the recovery unfolds.
Colin Ellis, Daiwa Securities, thanks so much for joining.